Hi friends, Simit here from informedtrades.com. In this video, I want to take a look at W.D. Gann. We have another video about him and his approach to trading trends in markets. Gann was a very successful, prolific trader about a century ago. A lot of his ideas are still pretty applicable, or things that we can study and learn from to get ideas for in our own trading. So some key points on how Gann approached trading trends. One, he was very into supply-demand analysis, a lot of the Richard Wyckoff type stuff. We have a bunch of information on this, courses on this on informedtrades.com. So the first step is to identify accumulation distribution zones. I recommend, if you're not familiar with that, you review the material on informedtrades.com, but just the brief, very simple idea is the idea of trading ranges, looking for trading ranges. Enter on dips within those ranges or breakouts. So he viewed trading ranges as very conducive towards providing setups where you can buy dips or sell dips, sell the rallies. Or conversely, the trend begins on the breakout of that range. So, you can either accumulate a position by buying dips, or you can wait for the breakout. In terms of money management or risk management, Gann liked to use pyramiding strategies after the breakout occurred. So the viewpoint here, the rationale here is that once the breakout occurs, you have your confirmation that the trend is beginning, and you can add to your position as the trend progresses. He also viewed or believed that after the breakout occurred, you're not going to get many more dips. So once the breakout of that range occurs, you're not really going to get too many dips. So strategies that involve buying on dips or selling on rallies don't really work as well. So that's where you can, shift away from, waiting for dips and towards pyramiding, adding to the position as it moves in your favor. Reduce total risk with each level of the pyramid. We'll get into that when we look at the example. And, Gann was very big on psychology. I've read a number of his books. He constantly emphasizes, plan your trade, trade your plan. The professionals make money, when the unprofessionals or the losers are emotionally frazzled, when they're trading on fear and hope. But if you're trading with a specific plan, that's how you make money. Okay, so putting all of that into an example, which I think is the clearest way to illustrate it. So here, this is a chart of the Dow Jones, a daily chart of the Dow Jones Industrial Average. So from here, starting on the bottom left, we see the market's been rallying. Okay, so once it reaches this level, market's been rallying, it gets to here, we start to see signs of a top. We see some reversal candlestick patterns forming. Here is our big particular one, this candle right here, which comes on strong volume. Another one of Gann's ideas is that market tops or significant reversals come on significant volume. So once we see this, we can, or one hypothesis would be that we're now entering a distribution zone, that the trend is over or the trend is ending, and now the market's going to enter a range that will precede a decline. This range is known as a distribution zone. So from here, you can either wait for a breakout of this range, which might be defined here. Here might be a chance to enter on the breakout of the range, or you can, if you identify this as, the sign that distribution is beginning, you can wait for rallies, and you can sell the rally. So, you see this candle here, and you put your entry order to enter here, you get filled here. So this is a way of getting the ideal entry point. You can do that, and maybe you get multiple shots, or you can enter on the breakout, which confirms that the trend is now starting. As this trend starts, as it moves in your favor, you can add to your position, pyramiding in, basically. So as an example, perhaps on this big candle, we have a big, strong move here. That might be a sign that you can move your stop and lock in some profit and add on a new position. Gann's idea with pyramiding is that when you add on a new position, for instance, let's say you add on a new position here, you put your stop here, the amount of profit that you're locking in from your initial position should be greater than the risk you're taking on with your new position. So the idea is that even as you add to your position when you're pyramiding, the profits that you're locking in are more than offsetting the additional risk that you're taking. So you're always sort of reducing your risk as you pyramid. And then here, we see a little bit of a volume spike. We see some reversal candlestick patterns. It's happening at a support level. That might be our cue to exit, and that a accumulation zone is beginning. That's about it. A short little overview of Gann's approach to trading trends. Any questions, anything you want to share, join us over at informedtrades.com.